Hello, all you crypto fans, and we have some crypto news for you. Coinbase has received a subpoena from the CFTC, and you guys might be thinking, oh, Coinbase is pwned now. No, it actually might be Bybit that's getting destroyed because the subpoena is not for information from Coinbase, it's for information on Bybit. So if you are trading on Bybit, all your base might belong to the government soon. Coinbase is warning that it received a subpoena from the United States CFTC, and the CFTC is seeking information about the Bybit cryptocurrency exchange. Now, it's kind of weird that they would subpoena Coinbase for Bybit, but I'm guessing Coinbase has some interesting information that they actually want. And it has to do with Coinbase's relationship with Bybit. Some people have speculated that any Coinbase customer who also used Bybit received the message, because there might be some transferring between the two exchanges. So we all know that Bybit does a lot of futures and secondary market stuff, so the CFTC might just be going after them. Recipients have speculated that any Coinbase customer who also used Bybit received the message, and Coinbase may provide information on users' accounts and transaction activities. So if you use Bybit and Coinbase, your activities and account activities might be revealed to the CFTC, and you might be in some trouble if you didn't pay taxes or something like that. Bybit is based in Dubai this year, and they're probably looking for transactions that might have helped terrorism or those things. So if you use Bybit and Coinbase, you might get a couple of messages and you might be in a little bit of trouble. Also, users who use both Coinbase and Bybit might just all of a sudden find their accounts locked. So if you use both Coinbase and Bybit, you might want to withdraw all your money right now just to be on the safe side, because you don't know what Uncle Sam is going to do. He just might bring the hammer down on you. So they're saying prudent risk management and enhanced AML anti-money laundering compliance have led Bybit to gain licenses in the UAE, Kazakhstan, and Cyprus. Now, Bybit has around 20 million users, and it described itself as a top 3 cryptocurrency exchange. Bybit, for its part, is growing much, much larger, and the US is probably focusing in on some more. I do think the US is going to focus on any non-US based exchange in the future. Maybe because they want to be able to control the flow of money, and they want to not let money flow into countries that they don't want to flow into, rather like Iran, North Korea, and maybe even Russia, those countries that are hostile against the United States, because they do want to control the global crypto flow and the global economic flow. So they're looking for information on Bybit. So if you're a Bybit user that also uses Coinbase, you might want to withdraw your money right now and keep it in your own private wallet right now, or cash out, because they might have allegations against users of Bybit. And I think Coinbase is probably going to cooperate with the government because they're not going to stick up for your neck. Because obviously they see how heavy-handed that the government was on Binance, and they don't want an $8 billion fine. And trust me, exchanges are going to look after their ass sooner than they're going to look after yours. So even though Coinbase is pretty good and I like Coinbase, wouldn't really trust them to keep my information a secret from Uncle Sam if Uncle Sam wants that information really, really bad, because they've already fired a shot across the bow to Binance saying that if you don't comply, we're going to pwn you just like we pwned Binance. Brian Armstrong probably does not want to end up like CZ, so they're probably going to give information on Bybit however much the government actually wants. And there is people on Twitter saying, I've been off Twitter watching some football. One of my friends sent me this email he received from Coinbase. I do not know how many people are subject to this, what the scope is. However, it looks like Coinbase and Bybit do not mix well together. Right now, if I were to say no other exchange and Bybit would actually mix well together. So watch out if you are a Bybit user that also uses Coinbase. A small thing about Kraken, they're investigating the Solana funding gateway. They have implemented a fix and they're monitoring results. And I think the issue is going to be resolved. I think people are making too dramatic of an issue of this over at Twitter. They're saying the house is falling down, but they've had withdrawal gateway issues before with other coins, so it's not a big deal. It only lasted maybe 30 minutes before they implemented a fix, and it should be perfectly fine. So nothing wrong with really Solana itself. I don't think it's a Solana network problem. I think it's just a Kraken problem, and they've gotten it fixed by now. So not much of a big deal there. Fed comments today has raised Bitcoin price. Yes, Bitcoin price was raised by dovish comments from Fed's Waller. So the typically hawkish Fed Waller said rate cuts could be on the agenda if inflation continues to decline, which it has. And that's mostly because the demand for oil is weak worldwide. China's economy is not doing too well, so their demand is going down, just like their population is, even though the government doesn't want you to know that. And Europe's demand for gas is going down because they're going to more renewable sources. And unfortunately for Russia, that part of the market is not coming back even when the war is over. So the demand from both Europe and China is going down. So the oil market is very, very weak right now. Despite their continuing cuts of OPEC Plus, the US, Canada, and Brazil are generating more oil than ever. And there's just a glut of supply right now. So I expect oil prices to continue coming down through the following year. And because that's happening, the rest of everything else is going to come down as well. And he's saying something appears to be giving, and it's the pace of the economy, noting October data and current forecasts for the rest of the fourth quarter as indicating easing on activity. And he says everything is moving in the right direction. But the killer is he says we might consider rate cuts within the next few months. Now, originally, me and just about everyone else, we didn't think we were going to get rate cuts until the second half of next year. But he's making it sound like, Q2, maybe even Q1, they're looking at rate cuts, and that would boost the economy. Obviously, they have to be very, very careful about this because they don't want to start inflation again. They don't want to start QE again. And Bitcoin obviously rallied on this news past $38,000, which is the other, the 1,000 mark that we haven't been able to get across. I think it'll take us anywhere from 2 to 4 more weeks to cross $40,000. Do not think an ETF is actually coming this year, although I would want to be pleasantly surprised in December. Still looking at January 10th, but realistically, it doesn't really matter if it comes December or January. It's all fine either way. It really doesn't matter at all. Unless you're playing leverage margins or you're doing day trading or something like that. But if you're not, you're a long-term holder, December and January doesn't make any difference. It's coming in the next 2 months. And the rest of everything else really does not matter all that much. So the Fed comments have raised BTC price significantly. And that's very good news. And I think the Fed will continue to get more bullish as oil prices come down, as inflation comes down. Because I just bought oil coming back from St. Louis, I think somewhere in Iowa for $2.56. It was unlead 88, but that works in all vehicles from 2000, all passenger vehicles from 2001 and onward. And pretty much most vehicles that people drive now were bought after 01 because it's been over 20 years. So really the gas price, $2.50 right now somewhere in rural Iowa. I think in Madison it's still $2.70 something, but it's coming down very, very, very substantially. And I do think it'll probably be $2.50 or less, by the time spring, summer comes around. So that's very, very nice. We're going to also look at the PYTH overview. It's a new oracle that aims to challenge Chainlink. Now, the thing about this is it's not, even though it's a new coin, it's not low market cap. It does seem to have a lot of adoption. It has very nice APIs. It works with EVMs, Solana, Aptos, and off-chain, so it has more development. They get data from CBOE, Jane Street, Upriver, Binance, OKX, Flow Traders, 2 Sigma, CMS, IMC, Acuna Capital, Tower, and Wintermute. So you get a lot of different data actually coming in as well. So first party data, and I think a lot of projects are going to be using this. But if you actually look at CMC, coin market cap on PYTH, it's not a small cap coin, and the dilution is going to be pretty hard coming in. So if you look at PYTH, 600 million right now, but only 1.5 billion out of 10 billion PYTH tokens are out. The fully diluted market cap is 4.3 billion. Obviously, you can't completely make a decision on that because you have to know what the release rate is. They're usually fairly aggressive early in the project. So if there's going to be dilution and the market cap gets to a couple billion, there's limited upside. However, if you look at Chainlink right now, it's about 8 billions, and I think Chainlink might be able to increase to about 80 billion, 60, 80 billion in market cap. So although it's not sky high potential 100x, I think there is still potential for PYTH, and it's probably a much safer bet than the smaller coins out there. They already have users for its Oracle, although like still relatively few compared to Chainlink, but they are actually gaining clients right now. So it might be one that you want to look at, especially if you're interested in the Oracle market. I know Chainlink dominates, but there's more than room for more than one. There's more room than for one Oracle because people are going to want redundancy. They're going to want to reping prices from several different sources, and PYTH does look like it has like some kind of support for its ecosystem. And it has a lot of good data, a lot of good APIs, and it does actually have users right now. I think Chainlink right now is still the much safer play, but PYTH does have more potential. And like I said, because there's more room for one Oracle, it could actually do some really good gains in the bull run. And it does seem like it's better than like Band and Teller and all those other Oracles were in the last bull run. So there is something there that you might want to look at, especially if you're interested in the Oracle market, because like I said, they're going to want redundancy in Oracles just to like reping and recheck prices so they don't have to depend on one source. And PYH, I do think, is a pretty good project to do that with. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.